webinar for the day. Good morning, everyone. Hope you also had a great weekend. Today, do I have my camera on? I do. Okay. Today we're gonna go over some of a dry topic, always risk management and stuff like that, but marketing and AI compliance in a nutshell. So these are going to be kind of a Q&A style, some stuff that's just, questions that are starting to come up more and more in our industry, especially with the use of AI and what can get us in trouble, what can't get us in trouble. And then same thing with advertising rules. We're going to go over a few things with just advertising yourself and your properties, and just making sure we're all following the DRE. So before we get into that, we have Gary with Tried and True Home Loans for our Monday mortgage update. Good morning, Gary. How's it going?
It's going good, Travis, and like I said, happy belated birthday.
Thank you.
Hope it was fun. Let me share my screen. Share. I know I ask this each week, but might as well be safe than sorry. So my screen is showing meeting 03/23/2026.
Sure is.
Cool. All right, and let me get the chat up and running. So if people do ask questions, I can answer. All right, well, good morning, everyone. Thanks for joining us on the meeting today. My name is Gary McDonald with Tried and True Home Loans. We are basically a sister company to Rise Realty, and you can find us in the back office. There's a bunch of loan officers in there, all very, very good and all working under Travis. So that's the start. So as we do get started, though, do feel free to use the chat to drop any questions, comments, or insights as we go. So let's keep this interactive. The more you guys engage, the more value we'll get out of the meeting. And just make sure in the chat it's set to everyone, because I think the default is host and panelists. And then if you do ask something, it only comes to me and Travis and not to the rest of the participants. So make sure that you do change that. So where are rates right now? Well, I was on last Monday and I was talking last Monday about the jobless claims, and the numbers weren't good. The job numbers were down on February by 92,000, and then they revised the January and December numbers down. So that is showing that the economy is slowing. So the Fed's reaction, or what people perceive would be the Fed's reaction, is to lower rates to make money cheaper so that people borrow and invest and get the economy going and put people back to work. And on the other side of the equation, we have, as you can see, the gas station prices gas prices going through the roof. So oil prices are causing inflationary pressure, which also the Fed doesn't like. So the proposed reaction to that is that the Fed raises rates to slow things down and get inflation back under check. So the Fed met, I believe it was last week, and kept things unchanged for now. But this is where rates are on the 30-year conventional. Last week we were at 6.41, and you're wondering, is the jobless numbers? Well, the jobless numbers must be making an impact on the rate. It's just that the inflationary pressures are still working. It could actually have been probably worse if the jobless numbers were good as well. But we're now at 6.53. Last week we were at 6.41. So we have nudged up a little since then. So basically mid sixes for a 30-year conventional. FHA 6%. Again, still going up. VA follows FHA pretty much to the letter. And then jumbo, we're just saying conventional at 6.5, jumbo only maybe an eighth of a point higher, if that. So jumbo mortgages right now, compared to the rest of the portfolio, is not that bad. And then the 15-year just over 6, maybe 6 and an 8. Well, not even 6 and an 8, just over 6. So that's where we are with rates. Not great, but it is what it is. So the thing I want to cover today is how to structure loans, but I also want to go over all the loan options that we at Tried and True Home Loans can offer to your borrowers. I don't want you to necessarily taking notes of this, and having a notepad and making notes. It's not your job to know all this. I'm basically telling you all this so that you can kind of know that there are options out there and to bring your borrowers basically to one of us at Tried and True Home Loans so we can help you. I will go over a few of the loan options that we offer. It is quite extensive. Basically, the only one that really causes issues is mobile homes on leased land. That's one of there are lenders out there that can do it, but we don't do those. But other than that, come to us. We can probably get something done. So let's get going. Every agent in this meeting has probably lost a deal that should have closed, and most deals are structured the same way, but there are 15 plus ways to structure the financing, and wrong assumptions sometimes can kill deals. So we basically have three options here. We can go the traditional financing, or we can go with the flexible financing, which is basically non-QM. And then we've got specialty scenarios, which we don't see a lot of. But if you have a borrower out there with something that's unique, come to us. There's probably still an option that we have for you. So this is basically where the deals get saved or lost. We've got three options for you. So let's go over the traditional first. You probably all are familiar with this. We've got the conventional. This is more for people with good numbers. Their credit's okay. Conventional can go down to 640, but most of the conventional buyers are high sixes into the sevens. They've got good income. Everything kind of looks rosy for them. Maybe not a whole lot of money to put down, so we can go in the 3 to 5% down. On a conventional, they would still have mortgage insurance, but conventional is for the borrowers who are reasonably strong. FHA, on the other hand, is a bit more flexible, especially when it comes to credit. Again, you can do low down payment, 3.5% down. As I showed earlier, slightly lower rate than conventional, but quite often the difference in payment is not that much. So if you can go conventional, quite often it makes more sense going that route, not always. But again, it's how the deal is structured is important. So again, early on in the process is important. Now, we also have VA loans with no down payment and no mortgage insurance. And of all the loans out there, this is probably the best loan. If you have a borrower who qualifies for VA, this is probably the best route to go for all loans out there. The only downside would be if the property condition is not that great. VA is kind of picky on the condition of the property. It only can be a primary residence, so it can't be for a second home or investment. But other than that, it's pretty good. Again, there's upfront payments because it's a guaranteed loan as opposed to an FHA insured loan. But if the borrower has service related disability, then those fees can also get waived. And then we also do use USDA, which is basically properties out in the boonies. We don't see a whole lot of this, but again, it's a zero down on the USDA and pretty good terms as well. We also do jumbo, and as I showed you earlier, the jumbo rates right now are pretty good compared to the rest of the loans out there. So we can also do jumbo up to, well, test us, we can probably go quite high. I believe I've seen some lenders going as high as 5 million. So we can go pretty high. And if 5 million is not enough, we can probably find lenders out there who can do more. But it's all about structuring the loan. Now, with these that I just explained, those are mostly easy ones for the W-2 employees. They got the income showing okay, and it all looks hunky-dory. There may be some challenges with credit and that kind of thing, but we can still get those loans done. So the ones you lose, the ones that almost worked, that's where the structure matters, and that's where I step in, or a loan officer tried and true, and we can do the flexible financing, as we call it, the deal savers. So built for real world buyers, not your W-2s who are, working for a corporation and it's all crispy clean, but they've got flexible income documentation. And this flexible financing, it solves this shouldn't work kind of scenario. And this is where most deals get saved that look like they're lost. So probably the trickiest one out there is the self-employed borrower. For the longest time, it was really, really tough doing these, but obviously, as time goes by, the lenders have figured out ways to get these done. So with the self-employed, the income, it doesn't always show clearly on tax returns. Cash flow is strong, but the paperwork isn't. So quite often the top line on the tax return is very high because they're doing great business and all that, but they have a whole bunch of write-offs. So the bottom line is quite small and too small to qualify for a loan. So we can use alternative ways to qualify. Best one is basically the bank statements, and we can do a 12 or 24-month bank statement program. So why would you do 12 months, or why would you do 24 months instead of 12? Well, 24 months is slightly better rate, not much, maybe an eighth of a point better. So it's slightly better rate. But with self-employed, as income can fluctuate. So it could be that in the last 12 months, the income hasn't been that great, but the previous 12 months, it was really good. So if we use the 24 months, then we can use, this past 12 months, which isn't good, but we can also use the good income from the previous 12 months, and that can get the numbers better and get them qualified. The 12 months, why would they go that right? Well, it's easier to do 12-month bank statements and upload 12 months than do 24. But the other thing is, with 12 months, it could be, like with businesses, they get better over time. So it could be that the previous 12 months weren't that great, but the last 12 months were great, in which case we would just use the last 12 months statements. So again, it's all about structure and getting the deal done. And another option on the self-employed borrower is a profit and loss statement, basically. Now, this must be done by a licensed professional, so someone like a CPA would need to do this. But if they do a profit and loss account, many lenders will accept that as well as income. So that's your self-employed. Now we're looking at investors and cash flow. So if you have borrowers out there who are looking for investment property, maybe their income won't qualify them and they want to go with a completely different approach, they can qualify based on the property itself. So basically, the lender sends out an appraiser, and the appraiser does the value on the property, but he also calculates how much it would get in monthly rent. And that is the income that they use to calculate whether the property qualifies or not. So we have this for investors buying 1 to 4 units, but we also now, some of our lenders will also do 5 to 8 unit properties on a DSCR program. So if you do have the borrowers who are looking for 5 to 8, because normally 1 to 4 is considered residential, above 4 is considered commercial. So 5 to 8 is a different beast. Not all lenders do it, but we do have some that do. So if you do have those, again, come to us. So other options out there, expanding your buyer pool, ITIN loans, the individual tax ID number. So you don't need a social security number. These are people who are in the country working. They've got tax returns and proof of income, and we can get these financed too. We can do foreign nationals, so people who don't even have an ITIN or a social security, they don't necessarily live in the country, but we can get them loans. I mean, the criteria is different. They can't buy a primary residence because they can't live here legally, but they can buy investment property. So again, with a certain amount of down payment, and again, each lender varies, they can buy investment uh, properties here in the US, well, in California, that's where we are. And so this opens up completely new buyer segments for you. I talked about this a while back. One of the lenders that we are working with has this program. It's for doctors who are basically going through college or just got through college, maybe not got the job or the income yet, but they can still get a loan with very little down, no mortgage insurance, and they can qualify based on their future income. So if you've got any medical professionals, this is a great product for them. Now, I talked about this one just recently. Again, this is someone who's looking to buy a property, 1 to 4 unit. Well, basically 2 to 4 unit, I guess. They will live in one of the properties in one of the units, so it's a primary residence, and then they'd rent out the other three. So they can do this on an FHA conventional with 5% down in even VA, because again, it's a primary residence, and AI just messed up, I guess, on this one. I didn't catch that one. You got double fastest path to building the equity. But yeah, so house hacking is also a great option for those who are struggling on the income. They can use their income. And again, on the non-QM, you can use various sources of income to qualify. So it's not always credit. Sometimes it's cash, sometimes it's the income structure, sometimes it's the property that breaks the deal. Solving the cash problem, again, I covered gift funds just recently, and I guess I better start to speed up. I'm going over a bit. Gift funds can cover 100% of the costs. You can get seller credits or down payment assistance, or you can do some kind of strategy with layering. So with the layering, we've got temporary rate buy downs. These are two examples. A 2-1 means that in the first year, the rate is going to be 2% lower than the note rate. So like I was just saying now, conventional is 6.53, I think it was, with a 2-1 buy down. The first year is going to be 4.53. The second year is going to be 1% under, so it would be 5.53. And then on the third year, it goes back to the note rate, would be 6.53. And with things like that, you're kind of looking or hoping that at some point during that period, rates will come down. I mean, it's a bit of a gamble, especially because we've been expecting rates to come down forever. And although they have a little bit, not as much as people had hoped. So on the rate buy downs, you can do a seller paid option so that the seller can pay for the rate buy down, but it just lowers the payment in the early years, and it helps. It says it helps buyers qualify and win offers, but in reality, the buyers do have to qualify on the note rate, so it would have to qualify on the 6.53 rate, not on the 4.53 rate. So that's, and then when the property is the problem, like non-warrantable condos, mixed use, complex properties, Commercial, we can also do commercial too. So some deals that the other lenders decline, we can do. And sometimes it is the property that is the issue. Condos that don't meet guidelines. So an HOA where the number of owner occupied is too low. If we have mixed use, if there's non-QM or commercial financing, we can still do it. What makes the difference is the right loan strategy, the right lender, and getting involved early. I've told you this a million times. You've got to get us involved early in the process so that we can structure the deal and know what the borrower or the buyer qualifies for. So you're not spinning your wheels or wasting time showing them properties that they don't qualify for. So how I help you win deals, or any loan officer tried and true, we structure the deal before the offer. We pre-underwrite the buyers and we catch the problems early. So it strengthens the offer positioning. So here's the reality. Strong buyers plus the wrong structure, it can lose a deal. But if you have a weak deal but the right structure, deals can get closed. The difference is how the deal is structured. So before you say no to a deal, call me or someone at Tried and True first. There's a very good chance we can make it work. If you need my contact information, it's here right now. You can either write it down, take a screenshot of the screen, or scan the QR code to get my details and insert them into your phone. So that's what I have for now. Any questions? I'm not seeing any questions. If you do have any questions, reach out directly.
Sounds good. Thanks for that. Yeah, we've saved a few of them, so it's always worth at least asking. Sometimes there is just some weird little property nuance. I had one purchase a couple months ago, and the one of our agents was actually buying a property, and he kept hitting an issue not with himself, but with the property itself and how it was zoned. And actually went through all of our lenders and found one that would do the exact scenario. We ended up closing it. It was, you know, we got the loan very late, but it was a little bumpy with the listing agent, but we ended up getting it done. So definitely, just throw it at us if you have one that's canceling, if you're on the buyer side or the listing side, and you want to see if we can save it. Just let us know, because we do have about 20, 25 different lenders or banks that we work with, and they all have these little tiny nuances with their programs that could make a deal work. So, all
Like I
right.
said, come early in the process. The earlier, the better.
Yeah, definitely. All right, I'm going to share my screen. We'll replace that, I guess. Hold on a sec. Let me get to the screen. You share. Okay. All right. So everybody hopefully can hear my screen, and hopefully the audio is okay too. It sounds like someone had an echo or something, but let's see. Um, One question that came in: do we lend in AZ? Actually, we don't. Um, it's at the moment, California and Texas are the places that we lend in. Unless it's a DSCR loan, we can do most of the states if it's going to be a DSCR loan. So for your investors, we can lend in the majority of the states. All right, so let's get on to the topic. Marketing and AI compliance in a nutshell. So we'll do a Q&A style of just more and more questions that are coming up, especially on the AI side. But then on the marketing side, probably a bit of a refresher, but these questions do come up. So it's good to kind of run through them, maybe once a year or so. So we'll start with AI compliance in a nutshell. So generative AI intelligence, or AI, we're all seeing it. It's rapidly changing our industry and many other industries out there. So it's something that we definitely need to watch, and it's posing new legal issues for everybody and compliance issues. So we're just going to run through a few, like I said, Q&A style questions on how to kind of remain compliant when using AI, and hopefully it'll answer some of the questions you maybe have. So the first is the most current law governing the use of AI altered images in advertising is as follows. So you may have heard at the beginning of the year, and when we did a new laws webinar a few months back, this was in there. I just wanted to touch on it because uh, I don't want to see anybody get fines. The MLS will fine you right away. They don't always give warnings, so we want to definitely be conscious of using digitally altered images in our marketing, especially if it's in the MLS. So yeah, effective January 1st of this year, AB 723 requires that AI altered images in advertising in real property be disclosed. So what is a digitally altered image? So AB 723 does define digitally altered image as an image created by or in the direction of the real estate broker or salesperson or person acting on their behalf. That has been altered through the use of photo editing software or artificial intelligence, and that is to add, remove, or change elements in the image, including but not limited to fixtures, furniture, appliances, flooring, walls, paint color, hardscape, landscape, the facade, floor plans, and elements outside of or visible from the property, including but not limited to street lights, utility poles, views through the windows, neighboring properties, things like that. We don't want to be removing that stuff out. I would not recommend doing that anyways. Um, but if you happen to do that, it does need to be disclosed. So what is not a digitally altered image by definition is going to be specifically included in the definition of digitally altered images or images where only lighting, sharpening, white balance, color correction, angles, straightening, cropping, exposure, or other common photo editing adjustments are made that do not change the representation of the real property. So yes, you can still clean up your images. If you're using professional photography for your listings, which I highly recommend, they do obviously polish those photos up a little bit, and that is fine. It's when you start adding and removing aspects of the room or property where you are then going to have to disclose. Is it legally required to disclose that a client is speaking to a chatbot? So chatbots are, they've been around for quite a while. They are getting definitely more sophisticated now with AI. So if the intent is to deceive, then yes, it is legally required to disclose. So California Bots Act made it unlawful to use a bot in online commercial transactions with the intent to deceive a person about its artificial identity. However, a clear and conspicuous disclosure of the bot's artificial identity will eliminate any violation. Just disclosing the chatbot to the client doesn't necessarily mean the chatbot can engage in licensed activity by soliciting buyers and sellers. AIs are so advanced at this point that it is quite conceivable that their use in the context of real estate could constitute licensed activity. So watch out for the companies that you're hiring that are, integrating any kind of AI into your website or anything like that. Make sure they're not going too far with things and that they are compliant. Or if you're building one yourself, make sure you're not having it perform licensed activity. So you would want to basically follow the rules and regulations of an unlicensed assistant if you're building something like that. Is there a problem with using AI to write property descriptions? I mean, this is probably the biggest use in AI on our listings right now that I see anyways, is using AI to write the property description. The conservative risk management approach is to use AI as a starting point, but not a final product. So if you're just kind of having a hard time coming up with a description and you use AI to do it, you're still going to want to review what that AI wrote about the property Why? Because it's useful but not always accurate. AI can sometimes generate so-called AI hallucinations, meaning it may produce false or misleading information that appears credible but is not accurate. In addition to the problem of misrepresentation, there is also the potential for the AI to inadvertently write a description that will violate fair housing laws. It's important that you always thoroughly review the AI generated output to ensure it is correct, analyze it critically to spot any issues that may not be immediately obvious, and make any necessary edits. So there's no problem with using AI to write your property descriptions. Just definitely give them a good once over to make sure that it's compliant and accurate. Should I rely on AI programs for legal advice or correct business practices? This is the one where I think the DRE is really going to start cracking down. They've already started putting out bulletins as early as last week about AI use in our industry. And it's starting to, I mean, it's a hot topic, but it's starting to definitely gain steam to where now we have DRE and these laws coming into place to help regulate that we just need to be aware of. So, um, I don't know how many times you've heard, your client jumping on Chat GPT or something to get an answer, and you're like, well, that's not 100% correct. It's the same, when you're using it as a real estate agent, um, the answers that they give you might be mostly correct, or it might be blending in other states and things like that, because some of the laws and regulations that it's trying to access to answer your question aren't readily accessible on the internet. You need, have some sort of subscription or something like that. So it does miss parts, definitely. Even some of you say, hey, ChatGPT said this thing. I say, well, that's mostly correct, but here is actually how you want to answer that question. So, um, AI programs such as ChatGPT are, they're amazing tools. They can be extraordinarily useful. However, in addition to the problem of AI hallucinations, again, AI program can only draw on publicly available information. This can sometimes cause AI to pick up incorrect legal theories or unvetted business practices. It's especially true in the real estate world where many issues involve the correct use of forms. These forms and much of the information explaining their use are not ordinarily accessible to the AI programs, such as, in zip forms. Um, Plus, the forms are constantly being updated. Although AI sometimes provide an exceptional answer, AI answers are not always reliable. The best risk management approach for answering legal questions is, of course, to call Car Legal hotline, or give me a ring as well. For business practices, you can use AI as a starting point, but it will always be necessary to review AI generated output directly and consult with the broker, policies, procedures, or again, call Car Legal if you have questions. Um, just don't blindly trust the AI answers that it's providing you. Um, I use AI to generate images and other content featuring celebrities, third-party intellectual property. Can I be sued for copyright infringement? I have actually seen a couple of these popping around, and it's not something that I would really advise. So, could you be sued? Yes, possibly. Lawsuits based on copyright claims are surprisingly common, regardless of AI use. While it may be tempting to use AI to generate images and other content featuring celebrities and or intellectual property owned by third parties, the risk is that you may subject yourself to a potential claim of using a celebrity's image without permission, or that you engaged in copyright infringement by using a song or movie clip without authorization. Best practice is to refrain from using AI generated content that contains images of celebrities and other well known individuals, as well as content that belongs to a third party, such as a movie, TV clips, songs, logos, etc. So, what if the AI creates a picture or design that is substantially similar to someone else's work? Can that also constitute copyright infringement? Legal issues here are fairly complex, but it should be assumed that AI created picture might result in a copyright claim. The bottom line advice then is to not rely on AI to generate pictures or designs, but instead use stock photo service. You may pay a little extra, but you'll be buying peace of mind. So that would be like, Adobe stock or something like that. You could get a pretty inexpensive membership with them if you need to use some stock photos. There's some other sites out there that offer some free ones as well. I think I saw something in chat. Maybe it's QA. Check. Nope, I think we're good. Okay. How do I ensure the use of an AI automated decision tree will not lead to illegal discrimination? So the risk is that algorithms used by AI and the content and data it trains on can inadvertently lead to outputs that are biased or discriminatory. A common circumstance in which these issues arise is the use of an automated decision tree for tenant screening or lead scoring. While there's no specific law governing the use of automated decision trees in real estate, the same principles of non-discrimination do apply. For property managers or when you're acting as a leasing agent, always be cognizant of automated systems criteria and ensure they are consistent in your screening criteria. If the automated decision tree is so cryptic or impenetrable that you cannot explain it, then you could face a problem if you're ever called to defend decisions based on its recommendations. So this is true even when using outsourced screening services, and we're starting to see some of that stuff come up as well. So just be mindful of that and the companies you're hiring or the platforms you're using to do this. Can I use a pricing algorithm to determine pricing or rents? This is also coming around right now, and I know some of you that are pretty good with building AI agents and things like that are starting to use algorithms to price properties rather than going in and manually doing it in the MLS. So on January 1st, 2026, Assembly Bill 325 came into effect, tightening up California's antitrust laws with the aim of prohibiting the use of common algorithmic pricing programs to restrain trade. It lowers the pleading standards and makes it easier for plaintiffs to file a lawsuit while keeping the same enormous antitrust penalties. So AB 325 does not limit collusion to the sharing of merely private information, but applies regardless whether the underlying data is public or private. So AB 325, it does not ban AI pricing algorithms altogether. Agents are advised to consult with an attorney before using them. So if you're building one that's going to automatically price homes or give them their price or something like that, check with an attorney first before you make that public. So Google must legally disclose an AI answer as such and provide source links. Are you required to do the same? The answer is no. Those legal requirements apply to very large companies. However, your use of an AI tool may be subject to vendor requirements. Some AI platforms may allow you to use the content generated for any purpose, while others may have restrictions on ways in which you can use the content. Make sure you review the terms and conditions of the AI platforms you're using so that you're aware of any restrictions. This could actually affect your website as well if you have any consumer-facing things that you're having built or you're building yourself, and you have an IDX feed on your website. MLS could suspend your IDX feed if they don't like some of the stuff that is being displayed on your website or it goes against their policies, procedures. So you do want to be mindful if you are integrating different widgets and things like that into your website that it is still compliant with your IDX feed for MLS. Might only get through the first section of these today. We'll see. How is AI being used in wire fraud and other scams? So because AI can generate sophisticated output, scammers are using it to appear more realistic than ever. AI can be used to create fake information, such as listings that don't actually exist or fabricated reviews. Even more concerning, AI can be used to create deep fakes that impersonate a person's voice, which bad actors then use to perpetuate, that's a hard one, wire fraud or other kinds of monetary scams. So remain vigilant and trust your instincts. Confirm that you're dealing with an actual person. Example, before transferring any funds, call your client at the number that you have file for them and ensure that the transfer request is actually at their instruction. This one actually makes me the most nervous right now is the wire fraud or the potential of wire fraud, because I am seeing some pretty sophisticated emails come across of buyers posing, or actually scammers posing as buyers. We had one just the other day where they wanted to it was potentially an owner in a parcel of land. Um, it was very convincing. Um, and when our agent went to the title company and had a statement of information that she wanted to get filled out by the owner first, and that's when the lead kind of went dark on her. And then lo and behold, we actually found the number for the owner. They said that they had actually been getting several calls about them having about them selling the land, and they had no intention of selling. So this was a scam. This wasn't a wire fraud, but it was another scam. So it's getting harder to recognize these. It's not just the king of some African nation wanted to wire you $3 million. That's not that kind of stuff anymore. It's definitely more sophisticated. And if you're just getting a random email from a buyer saying they found you online or they found you on Zillow, they seem like they really know you and have read through your profile. Um, Generally, those are definitely scams, because if you don't have a listing right now and you're just getting a pretty random buyer lead and they seem really excited to work with you and you're not advertising on Zillow, you just have your profile, I'd be very leery of that. We've had a few of those come across for sure. The most recent ones I'm seeing are using a Compass link, a link from, it appears to be from the brokerage Compass, like as if they found it on their website, and then they're wanting you to represent them on that particular property. So I'd be leery of that if they are including anything in there, or that they found you on the Compass website. I'm not sure why that has been their choice, but that's been a big one lately. Next, our last one, can a broker or agent avoid liability if they rely on AI tools? Generally, but the answer will depend on the specific claim and the specific area of law. Most federal and state agencies, including the California Attorney General, are proceeding on the assumption that the use of AI offers no defense against violations of the law or any harmful outcomes. Therefore, a conservative risk management approach for principal brokers and agents should assume that they cannot blame AI as a legal defense against liability under any law. So if you're just out there, implementing AI into everything you do and you're kind of letting it just do its thing, you get some sort of claim against you or something like that, just saying, hey, it was the AI's fault isn't going to fly in court. So don't count on that happening. Geez, 9:45. I think we get through most of this. So we'll do some advertising compliance in a nutshell. So advertising yourself and your services. So let's get into this. Is a real estate broker or office required to disclose license status in all advertising? So the ethics requirement here, anytime a broker advertises services for which a real estate licensee is required, or a real estate license is required, the broker is required to indicate by use of terms such as broker, agent, real estate licensee, or realtor, or abbreviations such as bro or agent, that the advertising being done by real estate licensee. This requirement applies to all real estate salespersons, not only brokers. The legal requirement is the disclosure of license status in advertising is legally required for any matter pertaining to licensed activity if made through a newspaper, magazine, mail, etc. Bottom line, yes, for realtors, always have to designate the the licensed status. So next up, must a real estate broker or a real estate office's name be included in all advertising of real estate services? The legal requirement is the law requires a responsible broker's identity, which includes the broker's name, but the broker's license number is optional when a sales agent or broker advertises real estate services. So that's a California Business and Professions Code. However, the law retains an exception for sale, rent, lease, open house, and directional signs. These signs do not need to include the licensed status disclosure as long as either the responsible broker's identity appears, which includes the broker's name, but not necessarily the license, which is optional, so that'd be our license. Under this exception, there could be no reference on the sign to an associate or broker or license. So that would be just Rise Realty with no other names on there. Or if there is no license identification at all. So it could just be, again, Rise Realty, but obviously you want to have your name and your phone number on the sign. So that would require at least your DRE number. The ethics requirement, yes, for real estate services and for listed property. In other words, if the advertising of services for which real estate license is required is done by a realtor, as opposed to a non-realtor licensee, or if the property being advertised is listed with a realtor office, which we are, the actual office name must be specified. So again, bottom line, yes, for realtors. Must a real estate licensee disclose his or her own name in advertising real estate services? I don't really know why you wouldn't want to, but a real estate licensee must disclose his or her name and license number in addition to the responsible broker's identity on the first point of contact solicitation materials. Must a salesperson also use the broker's name in an advertisement when using the salesperson's name and or telephone number? Legal requirement, the responsible broker's identity needs to be in the ad regardless of whether the salesperson includes his or her name. The ethics requirement, according to NAR Code of Ethics, the name of the firm must be present in any advertising of real estate services or of property listed with the firm. Therefore, it follows that all realtors advertisements of real estate services or property listed by the office must contain the office name. So again, yes for realtors always. May a licensee use a nickname? I've had this question come up usually several times a year. I get this question. So yes, you're allowed to use a nickname in advertising for a natural person as opposed to a corporation. A licensee may do so, but only if the nickname is used in place of their first name and the advertising includes the agent's surname or last name as it appears on his or her license, and the advertisement includes the agent's DRE license number if the license number is otherwise required. So let's see, we had one question come in. Does a realtor need to note at the bottom of a flyer or a letter for potential listing, if your property is currently listed, this advertisement is not intended to acquire a currently listed property, or something like that? Yes, I would do that if you're sending out mailers or if you're doing door knockers, that, you know, this advertisement is not meant as a solicitation of another broker's listing, because it could come across that way. And that's especially because when you're doing a mailer, you may not double check every home in that particular neighborhood or wherever your mailer is going to see if there are listed properties in there. So I would definitely disclose that at the bottom. Um, Next up, may a real estate person's advertisement themselves as independent real estate professional, and that is no. According to the DRE, if a salesperson wants to act or advertise as an independent or freelance real estate licensee in California, he or she must become a real estate broker, and there are no exceptions. That is not including a team name, though. May a real estate person advertise themselves as, for example, Doe Real Estate, assuming their actual name is John Doe? And the answer is no. According to the DRE, if a salesperson named John Doe advertises using that business name and the advertisements are accompanied by a web page and other materials that extol the virtues of Doe Real Estate, the public would mistakenly conclude that Doe Real Estate is a real estate broker, and thus such a practice would be unlawful. If you wanted to do something like that, we'd have to get into a fictitious business name, actually. So give me a call if that's something you were wanting to do. Must every real estate licensee include his or her DRE license number on all advertisements? With certain exceptions, every licensed real estate broker and salesperson must display his or her 8-digit DRE license number on all solicitation materials intended to be first point of contact with the consumer and on all real property purchase agreements if acting as the agent for the consumer. Mortgage loan brokers, we have a few of you on the team as well, also known as mortgage loan originators, must also include the unique identifier assigned by the NMLS system on all solicitation materials intended to be first point of contact with consumers. While there are certain exceptions for different advertising mediums, there are no exceptions to the DRE license number requirement on advertisements for any particular real estate market types or segments such as commercial or industrial real estate brokerage. What are examples of solicitation materials intended to be the first point of contact with the consumer? So the following advertising materials must contain the DRE license number or the NMLS number if you are both a real estate licensee and licensed with NMLS. So that's going to be your business cards, stationery, websites owned, controlled, or managed by the licensee, promotional advertising flyers, brochures, emails, leaflets, any marketing or promotional material designed to solicit the creation of a professional relationship between a licensee and consumer or is intended